Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and with me, as always, on Wednesdays is Jake. Unfortunately, David wasn't able to make it today. He had some personal things to attend to. But how's it going, brother?
It's going good, man. Glad to still be here.
Absolutely, absolutely. Yeah, today we're going to be talking a little bit about just kind of with everything that's been going on in the markets and just kind of how beat up everybody is. There's a lot of emotion in in people out there right now, and so me and Jake were talking earlier this morning and felt that it might be a good topic to talk about having an investor mindset. Trying to be more stoic, eliminate emotion. Really buckle down, reassess. Your portfolio, reassess your mindset. Reassess where your head's at and what you're trying to accomplish. And just all those different aspects that are going to either make or break you, in any kind of investing. So, Jake, why don't you? Well, actually, really quick, let me actually kick it over to here. I want to show your channel real quick. So here's our channel, DeFi Crypto and Airdrops. If you want to join the conversation, we can also, if you scroll down, you can see right here is Jake calls. He's one of our brother channels. If you want to check him out, he has some great DeFi content. Very, very successful in DeFi, very knowledgeable, has a lot of really good alpha and information to give out. David, that's usually here, DeFi University is his school where he teaches everyone from beginners to advanced in all aspects of DeFi. Guy is, I swear he's like autistic or on the spectrum or something because he's just really, really smart. I don't mean that as an insult. It is a
In
compliment
a
to the
good way.
highest degree. He is just really, really smart when it comes to DeFi. So if you want to check him out, then of course you got Drew over at Blockchain Basement, Discover Crypto, that gives out great content as well. And then if you want to check us out, we have a newsletter we just launched, and it's Monday through Friday every morning. I get up at 4 in the morning. Me, my brother Taylor, and some other people put together a basically boil down what's going on in the traditional markets and DeFi and crypto, and just put it in a nice, neat newsletter that you can read in 5 to 10 minutes while you're drinking your morning coffee and know what's going on in the markets and not have to pour over the internet for hours on end. So with that, let's go ahead and kick off into this. So Jake, what is some of the things that you do as an investor to really keep your head in the right place when markets get chaotic like this?
I mean, at the end of the day, you just have to follow the data and you have to, have conviction in your portfolio. So like one of the things I've been ripping a lot of videos recently on stuff like this. Past couple days I posted a couple videos and people have really found them really useful from the comments that I'm getting compared to the typical videos I made. And also like we did some stuff internally for our clients and whatnot. But like when Bitcoin's at say 100 grand, like we had the instance where it kind of like wicked it down to like 102K, whatever. We had that liquidation event and that worried a lot of people. Everybody's like, oh no, like, is this the end of the bull run? Like, should I have sold? Right. All this stuff. And, obviously the market starts to go back up, starts to perform a little bit better, get back up to like 115K. And then we're now at 100 grand ish. Now we're back up. We'll get there. But say it's yesterday. It's like we're at 100 grand. People are worried. They're like, well, hold on a second. This looks more permanent. And you have people saying, looks like I'll read some of these out. And first off, I don't mean to throw shade to anybody that's saying stuff like this, because again, like a lot of this stuff, what I like to say is it's not your fault, but it is your problem. Like a lot of this is manipulation, and it's not our fault that the markets are being manipulated, but our money's on the line. Therefore, it means it's our problem, and we have to do something about it. And that's just being a responsible investor. So one of our clients said internally, well, it was a good run, y'all. This market seems cooked. Seems all the whales who were selling the all-time high were spot on. The rest of us are just fish food. Ugh. Right. And just people generally upset. We had other clients saying, I need to sell. Like, I want to get out of this. My portfolio's down. This sucks. Like, this is horrible. I don't know why I got into this. And it's like, it's worrisome, because your portfolio is down a significant amount. Maybe you invest in liquidity pools when it was at 115K. Now it's like 100K, and now obviously things are down. Um, so you just have to look at it from that mindset. Follow the data, right? Does it make sense for the market to be over? Is institutional adoption picking up? Are there other broader economic factors that are influencing this overall market? Are there, let's see, a ton of retail investors flocking into DeFi, crypto, stuff like that? All of these are like data points that we want to look at and analyze to come to a conclusion. And to tell you what I see that the government has had its longest shutdown ever, right? Going on right now. I see
Mhm.
that banks are having to draw upon, multi tens of billions of dollars of liquidity. They call it ample liquidity. From the Federal Reserve, meaning the Federal Reserve is having to print a shitload of money to put money in the hands of the banks because people that are using the banks, aka the 1.5 million government employees that aren't getting paid right now or got furloughed, which means that they are kind of out of a job right now,
Mhm.
aren't able to work, but they're not getting paid either. Uh,
Yeah, and
they're
then you got the furloughed people.
yeah, exactly. They're having to draw from their savings,
Mhm.
which means that if they're drawing from their savings, the banks all of a sudden need liquidity because banks are taking your money and they're investing and they're earning yield on it, and they can't just liquidate those positions. So they have to draw from the Federal Reserve. Federal Reserve prints money, gives it to the banks. Banks go and give it to the people because people need their money. And then on top of that, people are also having to take out loans because they missed one paycheck. Now they've missed two. They can't handle missing two paychecks. Government employees, they're not paid a lot of money. So ultimately, they need support elsewhere now because they've missed two paychecks, and yeah, it's worrisome for them. Uh, yeah, that's kind of like what I see from the external factors. Will that affect crypto? Absolutely, because all of a sudden retail investors aren't having the money, or not as many retail investors have the money to invest into crypto and other asset classes. And then on top of that, we have to keep in mind that what was the word I was going for? Um, Man, inflation. Yeah. So inflation is picking up because the Federal Reserve is having to print a shitload of money in order to put it into the hands of the banks. And then on top of that, this is just not good at all because people aren't spending as much money either, meaning that money isn't trading hands as much as it was a couple months ago. So again, all external factors. That's number one. Number two is that retail still hasn't quite picked up on the fact that crypto is the future and that we're in a bull run right now. A lot of retail investors have negative feelings still towards crypto, maybe because they've been burned by NFTs that they told were the next big thing, or meme coins that they thought were going to go 1,000x, and stuff like that. Those retail investors aren't really like getting onboarded into crypto. Who is
Mhm.
getting onboarded into crypto are people in Brazil that are tired of their country's economy, that they'd
Mhm.
rather participate in the US dollar and hold that through something on DeFi. But again, I respectfully, they don't have a lot of money to impact the markets. Same thing with Americans. Americans have more, but Americans aren't really impacting the market. Who is impacting the market are the top 1%. They make 80% of the moves. You kind of get what I mean. Because the
Yeah.
top 1% has the most money. And institutions are onboarding, high net worth individuals are onboarding, people that have a lot of extra savings or a lot of extra capital and are comfortable are onboarding, right? But the retail, the middle class, the lower class are not onboarding. And that's the masses at the end of the day. So again, like we have to follow that. And as soon as the masses pick up, that's where the market turns around. But at the same time, eventually that's where the media starts to spread the FUD, say crypto's now done. And then, of course, that's where institutions buy in. And then institutions go and say, oh, yeah, crypto's the future. And then they're bullish, bullish, bullish. Meanwhile, they're selling their bags and
Yes.
flip flops basically again. And we get manipulated again. So, again, not your fault, but it is your problem. So, I got to do something about it.
Yep, yep. So, and I was actually, on that topic, I was actually having a conversation with a gentleman, that, I I kind of a guilty pleasure of mine is, whenever I get on, X, and there's some people that invest on emotion.
Yeah.
And so whenever you say anything that's negative about their investment, it's like you insulted their baby, and
Yeah.
they get really emotional and really angry about it. And so, at anytime I post something on social media or I say anything, I always have data. I have actual, I cite my sources, I give charts, I give data to support what I'm saying.
Mhm.
And, so, I was doing that, and of course, this person, was getting very emotional about it. And so, they went into that usual, throwing insults and stuff, and I'm like, "Do you have anything to offer this debate that is data-based? That's fact, that's logic?" You know, yeah, we can sit here and insult each other. I'm not gonna, go that far down that rabbit hole, but, I'm more than happy to poke you, and, just because it for me, when I have these discussions with people, I'm not trying to convince the person I'm in the conversation with. I'm presenting information for people that view that conversation, because you're never going to have anybody that's here has had a conversation with somebody about politics, investing, something on the internet. Have you ever changed anyone's mind? No. So you have to understand that sometimes the conversation you're having is for other people that run across the conversation. And I've had many people actually reach out to me, and I'm just going to say it about XRP. I'm constantly pointing out that basically how the use case of XRP has evolved. You know, Ripple at the very beginning, they were addressing a very serious pain point, cross-border remittances, cross-border payments. It was a very real thing. However, a lot of time has passed. There's a lot of other options, a lot of better options. Ripple understands this. They have evolved. They got away from using XRP as the bridge asset by creating RLUSD, a stable coin. Institutions and banks don't want to use a volatile asset to move value. There's a chance of them losing money in the transaction. So that's why they came up with RLUSD. I try to point this out to people, and of course they get upset. And but they need to take a breath and actually listen to what is being said. Can I be wrong? Is XRP going to go to $10,000? Maybe. Doubtful, but maybe. But it's just, if you invest based off emotion, you are going to end up being somebody's exit liquidity, because emotion, and I learned this in the military. It's psychological warfare. If you're familiar with any sort of manipulation or anything like that, is emotion. If you can get somebody emotional, they are very easy to manipulate. And I see that a lot in crypto investing, not just in XRP, but in investing in general. The hopium, people get whipped up into a frenzy, an emotional frenzy about the money that they're going to make, that they're, the generational wealth, the switches being flipped, those the terminology that's used to invoke emotion. And once they're in that mindset, it's very, very easy to get them in an echo chamber. Once they're in that echo chamber and they shun anything that is not repeated in that echo chamber, they're easily controlled. And that is what I see day in and day out, and why I push so hard on XRP, because it is one of the worst out there, when it comes to this. Is it's Hex was another one.
Mhm.
And there is nothing. XRP at least has Ripple behind it. Hex had nothing. I mean,
Nothing.
it had a guy that was running around buying Gucci bags with with their money, and they were worshiping the guy like he was some sort of visionary. I mean, it's insane.
Reminds me of the
But
mega pastors.
yeah, that's
This jet is
exactly
for the church. Oh, so we can fly on it? No, absolutely not. Um,
absolutely. So,
but yeah.
I mean, that's really what we need to understand about ourselves. And I'm guilty of it as well. I mean, I held 40,000 XRP all through the bear market because I thought that XRP had a chance of doing what they claim. But it changed with RLUSD. Ripple, the way that they were selling XRP and started buying all these companies. Very bullish for Ripple. Very, if I could own, Ripple stock, absolutely. Ripple fought the SEC because they didn't want XRP to be a security, because if it was judged a security, then they would actually have a legal obligation to holders to, basically, what's that called? Fiduciary responsibility to the
Yeah.
holders.
Yeah.
Because it's not a security, they don't owe XRP holders anything. They can dump on you endlessly and use that liquidity to grow Ripple.
Exactly. Yeah. And to
I
add
mean,
on
am I
top
wrong, Jake? Please, by
no,
all means, if I'm wrong,
no, absolutely not. It's a great point. And one of the things I also wanted to add on regarding um like the overall market dips as well, like something that I just forgot to mention, is within DeFi, we just saw basically within the time span of one day, $200 million wiped off the face of the earth for DeFi, or at least pocketed behind like a couple people, basically.
yeah.
There's a $120 million exploit on Balancer, which took Balancer
Mhm.
from 850 million in TVL all the way down to sub 400 mil, because obviously a lot of FUD, people getting out, people don't want to be part of that bad debt to people that did lose money. And then on top of that, $91 million in trading losses for a protocol called Stream Finance, in which I was literally popping the Discord because I had a couple questions just in the overall mechanism. I had $5 grand in there or something like that. But 91 million out of their $150 million in reserves was lost. So handed over to the lawyer, and after 3 years and probably $10 million in legal fees, there will be about 30 million of the $150 million in reserves left, and then that will be split amongst people, and people get like 20 cents on the dollar maybe
And
after
that's
3 years.
what happened with FTX.
Exactly. Yeah. And to chime in on that, that's not good news for the industry, right? That does not make people want to buy crypto. That does not make people want to invest in the DeFi. That makes people want to de-risk, which is also another reason why we saw a huge decline that day. Not only are we seeing all this FUD in the market from the government shutdowns and stuff like that, pair that with a big exploit, or not just exploit, but also hack of losses of $200 million in the time span of a day, which also has a cascading effect across other protocols that had exposure and stuff like that, probably of multi-hundred millions of dollars. It's like, that's not good either. And then also just pair it with the emotional mindset of most investors. We had to, yeah, do some damage control internally, just because a lot of our clients were worried. They're like, well, shoot, like, what are we supposed to do here? Do we miss exits? Like, should we have exited? Should we be exiting now? We had a lot of clients want to flip to stablecoin positions. Sure enough, you hold a day like today, Bitcoin is now at $103,000. Like, it's up. Ethereum's at $3,400. It's up 5%. Like XRP, we don't like it, but it's up. Like Solana, it's up. So it's like things are going back up. And I'm not saying that they're going to stay here. I'm just saying there's always going to be a huge rush down because of emotional investing, right? And be my guest, because at the end of the day, you're going to be exit liquidity, and somebody needs to be exit liquidity. So wait a day or so, wait for those emotions to pass, wait for people to be a little less worried. A lot of the times you're going to have a better exit price if you truly want to get out of this industry. Like, I was down like 80% on my leverage positions on drift. And I'm like looking at that, I'm like, oh, that's pretty bad. But you know, I had a strategy, which is A, I'm either gonna lose all of this money, or B, I'm gonna make 100 grand off of 30 grand, right? So my risk reward is like 3 to 1.
So basically, my catchphrase is either zero or Valhalla.
Exactly, exactly. My risk reward, I guess 1 to 3, basically. I could lose it all, or I could make 3x, and I was fine with that. But the last thing that I'm going to be doing when we're down, the last thing I'm going to be doing right now is changing up my strategy and be like, oh, we're down 80%. This is a little bit scarier than I thought it was going to be, so I might as well exit this. And then ultimately, I look back 3 months later and be like, oh man, what did I get myself into? Why did I do that? I don't want situations like that. So I pick a strategy and I stick to it. With my liquidity pools, again, it comes down to a combination of back testing and again picking the strategy and sticking to it.
Mhm.
My liquidity pools were down 12%, which was roughly $6,000 or so. But my profit versus hodl was positive. My earnings retention, it wasn't amazing, but it was still positive, meaning I'm beating hodling in the market. It was about 30% earnings retention. Um, so it's like, to me, that just shows that my strategy worked. Like it worked. Now, are
Yeah.
there adjustments I need to now make to my positions now that the market has gone back up? Absolutely.
Well, the
And
battlefield has changed, I mean, and
exactly.
that's what, investing is a lot like combat, it's as the battlefield evolves, you need to evolve with it,
Yeah.
otherwise, you're gonna be a casualty.
Yeah.
So, and I appreciate if anybody that didn't watch, our last episode last Wednesday, Jake was very, very, transparent and, shared pretty much all of his positions, and was showing, how he was down, so I very much appreciate that transparency.
Yeah. Let's dive into them again, just so I could show an actual update. Um, But my point is, it's like when you pick a strategy and you stick to it, and you're also relatively conservative with your strategy and have like a goal that is actually achievable behind your strategy. So my goal being asset accumulation, ultimately it's pretty easy to win. So let's dive into it. Look at that. Nice down $3,100. And first and foremost, I want to point out that there's a big thing to take into account here. A lot of people,
Hey,
and
real quick, this that he's showing, this is Metrics Finance. If
Mhm.
you're not familiar with it, there's a link in the description that you can go check it out. There's a free version, so you can go to, the YouTube channel. It's one of Jake's YouTube's channels, and there's a bunch of tutorials. I highly, highly suggest that you at least use the free version. I I personally am using a paid version, and people in our community have repeatedly told me that it's saving them more than it costs them.
Yep,
So anyway, I wanted to, pitch your
of course.
project here
I
because
appreciate it.
it has such value.
Yeah, of course. I appreciate it. So yeah, I mean, like regarding this though, like my strategy is to accumulate assets, meaning if I hold, like if I were to invest into Bitcoin, say a year ago, right? I'm not focused on day trading Bitcoin or anything like that. I'm just focused on letting Bitcoin do its thing and go up in value. So I'm doing that, but I'm adding another mechanism here, which is I want more Bitcoins over time, which I can generate through liquidity pools. Now, the risk is I can actually lose some of my Bitcoins over time. And that's just one of the examples that I'll use strictly with Bitcoin. I'm not actually in any Bitcoin liquidity pools. I'm more in Sol Render, ETH Tau, and then ETH Hype, basically. But my point is, if this number right here is green, that means I'm accumulating more. If it's red, that means I'm losing like assets by being in this pool because people are trading back and forth between them,
Mhm.
and buying one, giving me another, buying the other, giving me the other, basically. Um, so ultimately, I don't care what this number is, at least for the time being. I do eventually, not right now. I care if this number is green because I know if I'm not in Soul Render liquidity pool, I'm also going to be down. But in this
Well,
case scenario,
me and
since
you see eye to eye. I'm all about stacking more assets because
yeah,
I'm more for the long game. I'm looking at I want more assets so when the price goes back up, I'm in a better position than I was before. So,
exactly,
like back in December when, my portfolio was twice what it is now. When I get back there, if we can get back to those levels, but this whole year, I've been stacking more crypto, I'm going to be in a much better position dollar wise than I would have been. Now, if you're somebody like David that is living off the money, it might be a different story. It
you need a
really
different
depends on
strategy.
what you're trying to accomplish.
Yeah, you need a different strategy. And just for context, like the reason why this works best with me is because I run multiple businesses full time. So I
Mhm.
don't have the time to do what David does. I really wish I could. It'd be cool. But also to me, I make a lot more off my businesses than I would make investing into DeFi full time.
Mhm.
So it's like you have to determine that trade off. Like a lot of the people I work with as well, are similar to me. They run a business full time, or maybe they're a doctor, lawyer, some type of professional, basically, that is busy with their job. They have a family. The last thing they want to do is dive into DeFi and add on to that workload,
Mhm.
and be full time in DeFi, because guess what? They're already generating a full time income. So rather, what they do is they take their already existing crypto investments, spend maybe a couple hours per week, right? And then they use their crypto investments to generate more crypto investments. It's as simple as that. So we're running passive strategies. And again, not dodging on what David does. Different strategies are required for different people. Everybody's in a different situation. And I
Well,
completely
that's
respect
how he
people.
makes his living. He doesn't
Yeah,
have a 9 to
exactly. He's
5
living it.
job. He's not, he actually makes his living to pay his bills off of DeFi.
Exactly.
So, the time that he invests in, that most people would invest in a job, he invests into DeFi. So, it's just
Exactly.
a much different, we're all in much different places, I guess is the best way
Exactly.
to put it.
Yeah, 100%. Um, but yeah, we work with a lot of busy people, so it's like our strategy is focused on accumulating more assets, letting the assets do the heavy lifting, and then when they're up, we're up more, basically. Simple as that. Like, we're not trying to do anything too complex because we're busy people. But to show you, like, this is down 3,100 bucks. That's 6%. Now, a lot of people, what they often forget is people will buy Bitcoin at 50 grand, and then all of a sudden Bitcoin's at, say, 110K. And then they're investing into a liquidity pool with their Bitcoin that they bought at 50 grand, but at a price of 110K. So when Bitcoin goes down to 100K, it shows a loss on their dashboard, right? But at the same time, that loss is isolated to the 110 to 100 period, right? When in reality, they're still at an overall profit because they actually bought that Bitcoin at 50K. Like, that's something that a lot of people often completely miss because they're just looking at a dashboard. While I think our tool is great, we do not go and track to the very, very first cost basis. We input at the time that you input it into the liquidity pool, or entered, exited, claimed, withdrawn, whatever it is, basically. We pull the price at the time that you did that action. And that's how
Mhm.
every other tool works. And that's the best way to do it. But you have to keep in mind, if you bought Bitcoin prematurely at 50 grand and now you're entering into a liquidity pool at 110 and now Bitcoin's at 100, it's going to show a loss unless you go
Yeah.
in there and manually update like your cost basis and metrics or something. Um, but yeah, so I mean, that's like another emotional shift. Like, don't be strayed by these numbers on the screen, because at the end of the day, these are just numbers on the screen. Don't over allocate to a specific investment, into even a specific asset class. Crypto, huge chunk of my net worth, but it's also like a chunk that if it were to go away, I'm not going to be on the street. A lot of people will over allocate. They'll put their savings in crypto or something like that. And then, guess
Well,
what?
really quick, I want to dial in on that a little bit, because that right there is a huge key to staying unemotional.
Mhm.
If the money that you have invested in crypto, it is very volatile. I mean, you can lose everything at any second. I mean, it all could go to zero. I mean, back when we had the dump in October, there was a bunch of, Cosmos is one of them. It went all the way down to zero for a split second. If if it's money that you wouldn't be willing to go to Las Vegas and, bet on black or something like that, it's probably money that you should not be investing.
Mhm.
If it's money that you need to pay the bills or pay the rent or, put food on the table, it's money you should not be investing.
Mhm.
Anytime that I invest money into crypto, it's in my head, it doesn't exist as money anymore. It's just
Mhm.
numbers on a screen, and it allows me to detach emotionally. So whenever I see it dump and go down, it's like, okay, eventually that, digital number will go back up. And you have to find ways to check yourself, I guess. So I'm sorry, go ahead.
No, you're completely right. You have to keep yourself in line. Don't invest what you can't afford to lose. Like, if my crypto portfolio went to zero, is it going to set me behind financially? Of course, right? Is it going to put me on the street? No. Am I going to have to probably save a little bit more money, right?
Am I
Or
gonna have
invest
to
in a
sell feet pics on OnlyFans? Maybe.
Yeah. Like, I'm gonna have to do that. Am I gonna have to work a little bit harder to make a little bit more money? Yeah, of course. But it's not gonna put me on the streets. It's not gonna kill me. It's not gonna do any of that stuff. So it's like
Yeah.
that's one of the lessons that you have to learn as well. And then also within your portfolio, you need to diversify across different strategies. Liquidity pools in periods of volatility, well, I'm showing you three ones right here that held up very, very well. They will get wrecked sometimes. I have positions that have thousands of dollars in divergence loss because of volatility, because assets just diverge
Mhm.
from each other, which ultimately hurts my portfolio. So it's like during periods of high volatility, liquidity pools sometimes are not your best friend. Sometimes they're your worst enemy, which is why it's better to also have hodls, also have lending allocations, also have staking allocations, and all these
Thank
different types of strategies. Um,
I'm huge on that, especially people that are new to DeFi. I know that this is something that me and you sometimes see differently, but I always steer people more towards staking, lending, and maybe even full range pools just because they're always earning with those.
mhm.
Potentially, are they earning as much? Probably not, as they could in other things, but it's a great way to start to understand how DeFi works and the power of DeFi and compounding.
Yeah.
So it's just that foundation that they can build on and build confidence. So anyway,
Yeah,
go ahead.
100%. Yeah, and in our curriculum now, what we're doing is we're basically people that are completely new to this. We're getting them into their first staking position, then their first
Mhm.
lending position, and their first liquidity position. And when we do those, we're doing it with sub 10% of the overall portfolio value. And
Mhm.
then after that, what we do is we dive into the deep into the pool with floaties on. So we essentially, yeah, it's a great analogy. I know. I thought of that. I'm like, man, I'm
D
proud of
D
myself.
D DeFi floaties. All right.
Yeah, exactly. And what I mean by that is we're diving into liquidity pools with the strategy that we have used, but we're mitigating our risk by doing maybe a small chunk of our capital to get comfortable. Because at the end of the day, if you don't ever just touch the deep end of the pool, you're never going to learn how to get into it. So you do
Yeah.
need to dive in, but you also need to make sure that you have set yourself up to, if you do lose money, you're not blowing your portfolio, and you're not just taking a huge carve out of your portfolio. So,
I
um,
I always I always advise people, not advise, I guess, it's not financial advice, but I always tell people that, get into the lending, staking, and full range pools, and then with the yield that you earn, let that build, and then use that for the riskier, ranged positions and, things like that, to
mhm.
scratch that itch, because then you're playing with the house's money. And again, when it's the house's money, it's not your original liquidity, you can be less emotional about it as well. So,
Yeah, I can see that as well, and I would add on to something like that. Um, One of the things and one of the often biggest failures that I see in portfolios, and one of the reasons why a lot of people end up like just losing a lot of money or getting emotional about their trading, is because they don't believe in the assets. Like when we look at my portfolio, it's like
yes.
render, Tau, hype, like ETH, Sol, stuff like that, and even my hodls. I believe in the assets, and not just because I'm like, oh, asset go up, price go up. It's more of like I'm digging into revenue, expenses, overall profit, market caps, inflation of the token, competitors. I'm digging into all these things before choosing if I want to invest into it or not. So everything that I do in DeFi and crypto is backed by data, and I trust the data. And I'm like, hey, if they have this trend over time using their like profit loss and stuff like that, and they have this market cap, it's almost hard for this to fail in the long run. And I've found that to be a successful strategy for me, because again, I'm not emotional about it because I'm like, hey, the data's there. Like this shit's undervalued. Like, why would somebody not buy this? It makes absolutely no sense for somebody to buy this. It makes no sense for it to be at this price right now. And very quickly, that price gets eaten up because people realize that as well. So it's like follow the data, believe in the assets to a point where you've actually conducted your due diligence on them and you understand their business models and you make sure that all that money is injected back into their token holders and stuff like that. And it will be pretty great for you, and you won't be making emotional decisions because you'll be making data driven decisions. But the caveat to that is, and I used to think this way as well. It's like people say, oh, what if we just allocate, X amount of the portfolio to these high risk positions that are doing very high APRs? What if I just do 3% of the portfolio here? And the thing is, it's never 3%. That's like taking a wallet full of cash to Vegas and saying, okay, I got $1,000 in my wallet. I'm only going to put $30 here. And then guess what? You make $30, so you double down. Or guess what? You lose $30, so you go try to put another $30 to make it back, right? And it's a constant death spiral. Like one of our clients had a once again, not bashing anyone. We want to use these as learning lessons. And I made the same exact mistakes, actually, probably worse than all of you, um, and all of the people that have made these mistakes. I lost $50,000. I'll raise my hand. Not a fun time, not a flex whatsoever. But one of our clients, we do this asset accumulation strategy, lend out Bitcoin, lend out ETH, borrow USDC, put that into stuff like ETH, USDC, broad ranges, simple as that, repay debt over time. That's the strategy. But then over time, like not like without us knowing, the strategy starts to shift to, oh, now we're diving into Sol Fartcoin and Sol Pingu and these assets that are just like horrible, that have no reason to hold them. And it's with a portion of the portfolio. And we start to dive into, or they start to dive into tighter range, like crypto to stable positions. And again, it's like, that's not what the strategy was, but it's the greed that's wanting them to go over there, get higher APRs. And ultimately market crash comes down, it hits the portfolio hard. And now all of a sudden, it's like, oh, like this strategy doesn't work. Well, it did work, but you weren't using it. That's the thing. You went off track. So pick your strategy and stay on track, right? We're not like a train trying to jump across a bunch of different rails, right? We pick the railroad that we want to be on and we
Mm.
go on that railroad. Simple as that. Another example I'd like to say is back when I was like 16 years old, just got my driver's license. I always like to like speed up and go super fast and go well above the speed limits and all this stuff, right? What I noticed is, and say I'm taking all this extra risk. I'm taking all this risk to potentially get pulled over or get a ticket. A ticket's a couple $100. Maybe I'm felony speeding so I could get locked up, whatever. But guess what? The person that's going slightly above the speed limit, maybe, or even the speed limit, because in Texas, slightly above the speed limit is the speed limit. The person that's going that fast, every time I get to a light, they pull up like a couple seconds later, right? So I'm getting at the destination at the same exact time, but I'm
Yep.
taking significantly more risk, and somebody else is following the rules, sticking to their strategy, sticking to the speed
Slow
limit.
and steady, man.
Okay?
It's tortoise and the hare.
Exactly. It's like my point is when you pick your strategy, stick to it. Because if you keep trying to switch up and you keep trying to expedite things and you keep trying to push things by taking unnecessary and unwarranted risk, it's going to blow up in your face. And you're going to be like the person that's speeding up all to get hit by a light. And then the person that's going the speed limit pulls up right next to you and gives you a silly look because they're like, what the fuck are you doing? Like, we're at the same spot now, man. So it's like, don't be that person that blows your portfolio because of emotional decisions because they want to get rich quick. One of the things I'll openly say is I think DeFi is and don't get me wrong. If you somehow are a wizard with this stuff, like there are meme coin traders that are actually good, but again, a huge portion of that is luck, and a lot of it comes down to like having an eye for trends and having an eye for marketing and social presence.
A
So
a
again,
a lot
it's
of it is that, and a good portion of it is that they are very, very knowledgeable about how to get in fast and how to
yeah,
get in early.
yeah,
And because I mean, it's even worse now. It
yeah,
used to be that memes lasted like weeks or months, even the flash in the pan. Now
mhm,
it's like minutes or hours.
yeah, yeah, yeah,
And so, it used to be, and because I mean, tried my hand at memes, forever ago, and, there was a guy that had a channel, and his name was Taco, and, he was getting in on a meme, and I was trying to get it in on it at the same time as him, but he was a lot more knowledgeable, was able to get in on it. He made a couple of $1,000, and by the time I got in on it, it dumped.
yeah,
So I ended up losing the couple $100 that, that
mhm,
I was gonna, dedicate to it. So it really is with meme coins, a lot of it is like you said, being able to see like that squirrel that the government, confiscated from that guy. I forget what the squirrel's name was, but they confiscated
yeah,
the squirrel and euthanized it, but they came out with a meme for it. And like you said, they were able to note, see that and see what the mood was.
yeah,
This was before Trump got elected and stuff like that. So there was the whole, you know, um, kind of, government stay out of our lives. It was after COVID,
yeah,
so there was that mood. And so everybody was, outraged about it. And then that meme came out. And the
yeah,
people that saw that, Peanut, that was his name.
Yeah.
Um, so yeah, I mean, that is a perfect example of what you're talking about.
Yeah, and my point is like just pick a strategy and stick to it. Like if memes is your strategy, you got to stick to memes. And it's very hard to segment the two. So it's like with me, asset accumulation is my strategy, so I'm not going to deviate from that. I'm just going to keep pushing and use opportunities like this to buy the dip. I said I'm expecting Bitcoin to go to $150,000, so it's like I'm not going to be selling at $100,000. I'm not going to be selling. I mean, maybe I'll sell a little bit earlier to $150,000, but not 50% off. Like that's pretty far off. So it's like pick that strategy, stick to it, make sure you believe in the assets, because when you believe in the assets and the belief is backed by data and backed by actual reasons to hold, then it'll do you wonders. And on top of that, I truly believe outside from the small people, and when I say small people, I mean like the small portion, because most meme coin traders will lose and most retail investors will lose. Don't get me
Oh
wrong,
yeah. No,
but
for every millionaire, there's a whole slew of people who lost everything or
yeah,
lost some.
and that's when you're trying to chase high returns, there starts to become more competition. But for the like, let's call it the normal way of investing in DeFi, let's just say, which we could call asset accumulation, right? Buy the assets, accumulate more of them, the normal way of investing. Um, the number one thing that I would like to say is it takes money to make money. Like, don't invest like I probably wouldn't invest in DeFi if I had less than $10,000 to invest in DeFi. I'd probably find something else. I'd find something else where I can have a higher return with a similar amount of risk, which would probably be starting a business, which would probably be maybe even investing into just like some stock play or something like that. That's backed by like conviction and stuff. Maybe just buying Bitcoin. And when I say that, I don't mean like, oh, don't touch crypto if you have less than 10 grand. I mean, 9 times out of 10, and there are exceptions to this, and a lot of those exceptions are if you live in a third world country like Brazil, where the economy is not so great. But like the 9 times out of 10, talking US case, if you're investing less than 10K, you will make more money going and working a job than you will spending all that time in DeFi trying to manage your positions. So why not just go work a job? Or you will
Yeah.
make more money going overtime at your job or picking up a second job, right? So why not just go do that, stack your capital, and then come back to DeFi? You'll make significantly more money.
Or,
Uh,
or just like you said, earn money, whatever you can afford, you put it in staking, you put it in lending, something where you're
Stuff that you don't have to
basically
touch.
hodling.
Yeah,
What's
stuff
that?
that you don't have to touch.
Yeah. No, it's like I mean, there literally it's fire and forget.
Yeah,
There's risks, yes. Can a protocol go down? We've seen it recently. Absolutely. You need to understand the risks, but for the most part, your liquidity, as long as it's, you're not hacked or something like that, it's there. You're going to get full price appreciation if the price goes up. Of course, if it goes down, the same thing. You have full exposure, but you're always going to be earning
yeah,
while you're at your regular job, while you're taking care of your family, while you're doing yard work, whatever.
yeah.
That is a great way to dip a toe in to DeFi.
Yeah,
But
100%. And here's my point, just zoom out on Bitcoin. Like it's better to do this. This is a good strategy compared to traditional investments. So it's like just keep that in mind. Like if you're doing less than 10 grand, probably want to do that. And even now, I feel like the minimums are getting higher because the yields are getting slightly lower.
mhm.
Still pretty high yields, but like I don't think it's worth it doing under 10 if you're trying to do liquidity pools. Like unless you're going with a liquidity pool that's going to be open for like at least a quarter of the year. It was super broad range. It's probably not worth the return that you're going to get, especially if you're trying to manage it super often. So what we found to work, and again, this what I'm saying right here is backed by data, because again, that's how I invest into things. So when you listen to me, if you listen to me, and again, it doesn't affect me if you do or don't. It's probably better for me if you don't listen to me because then you could be exit liquidity for me. But what I'm saying here is like what we found based on 30,000 metrics users over the course of the 2 years that we've been in business, and of course the 300 plus clients that we've worked with over the course of the 2.5 years that we've been in business, there is broad range positions, right?
Mhm.
Stuff that you're rebalancing every couple of weeks. Couple is at least two. It is not one. It is at least two. And on top of that, using assets that you truly believe in, stuff that is backed by data. And that belief is not backed by emotions. It should be backed by revenue, backed by market cap. Like if something has a $100 million market cap and it's generating 30 million a year in revenue and it's profiting, say, 15 million a year, it's actually not that bad of an investment right there in the
Mhm.
crypto space, because there's projects that are doing 10 million a year in revenue and have multi-billion dollar market caps. So it's like
Thank you.
when we look at it in comparison to that, it's like, well, that seems like a crazy good investment. This seems undervalued. You buy in, and over the course of 6 to 12 months, people realize this was pretty undervalued, and it starts to make waves. And of course, it starts to pick up as an investment. So it's like invest into things backed by data. Sometimes you're going to fail either way. Like it does not matter. But
It's not, there's no perfect, perfect science. All you can do is mitigate your risk,
mhm,
and I actually learned quite a bit, running companies, after getting out of the military, sitting down with VCs and different investors and, high level, discussions about how they assess and how they look at potential investments, the
mhm,
questions that they ask, the things that they look at. And I'm glad you brought that up because it really is something that I think a lot of people in crypto miss because they don't understand how a business is valued.
mhm,
Um, you know, Understanding that, it needs that the company needs to generate revenue. If it's not generating revenue, then it's not a good business. I mean, look at our government. The only revenue it generates is our tax dollars, and it's probably the worst run company, on the planet. It's if any of us had a business that we couldn't print magic money, then I mean, our government would have been out of business long ago.
yeah,
That's the only thing that keeps our government running is that it can print money and basically sell its debt.
yeah, exactly. So it's like keep the emotions aside, stay diversified, but not too diversified. What I like to say is diversify across the strategy categories. So don't just do liquidity pools, don't just do HODL, diversify across them. Um, and then diversify within those depending on how much management it requires. So I know I can diversify more in HODLs than I can in liquidity pools. So I might run 3 to 4 liquidity pools at once, but I might have 8 to 10 HODLs or something at once, you know, because I know HODLs aren't going to require me to do anything, whereas liquidity pools are. So it's like keep that in mind as well. And then also, like on an even broader spectrum, diversify across asset classes, like how much in crypto, how much in stocks, ETFs, how much
Mhm.
in what do you call it, real estate, like how much in oil and gas, like
How much in Pokemon
diversify.
cards?
What's that?
How much in Pokemon cards?
Yeah, exactly. How much in Pokemon cards? Like diversify across asset classes and stay diversified, but to an extent. We've had people come on, they have like 50 hodls or something. They're like, okay. And they're like, so I want to do a liquidity pool with each one. And I'm like, no, you don't. Like, you do
No,
not
you
want to do a
don't.
liquidity pool with each one. Like,
Honestly, I don't like having more than 4 or 5.
Mhm. And that comes from like a lot of people won't listen, and that's the sad part. But like and it's because they think that they know better, and they might. Like, first of all, I'm gonna say that I'm not trying to sit here, like, say I'm the best person because I lose money too, right? But I'm saying, like, humbly, from 4 or 5 years of experience, like, being in these markets and just, like, losing a shitload of money, like, I know what loses money, right? And to make money, you do the opposite of what loses money.
Yeah.
Like, so it's like I know the feeling of wanting to just dive deep into like run 10 positions. I've ran 10 positions at once and I've made more money running 3. And some people say that's not good risk management. Yeah, when you look at, say, I'm putting my entire portfolio in 3 different liquidity pools, it's not good risk management. But when you say, hey, I'm putting 40% of my liquidity, or sorry, 40% of my portfolio in 3 different liquidity pools, that's not so bad. And then you say, okay, and then I'm putting 30% of my portfolio in 8 different hodls. And then I'm putting another 30% of my portfolfolio into 3
Borrowing and
lending.
lending and
You know
looping
what I
or
mean?
something like
So it's
that
like
to where, yeah, I mean, it's, you're generating, I mean, even lending. I mean, even if you just have like, a good amount of stables, and you're
Yeah.
just lending them out for 10% or 15% or something like that. I mean, that's no maintenance, and then you have those, those 3 pools that you're talking about, there you go. You're kind of, you're kind of levering up your earning on those liquidity pools. It's like, yeah, you're only making 15% on your stables, but you're outpacing inflation.
Yeah.
It's better than it sitting in a bank account in US dollars.
Yeah. And another thing is like get greedy, but not too greedy. One of the things, like, there's a lot of crypto investors that are like, "Oh, I don't want to do all this DeFi stuff. Like, I feel like I'm being greedy, and being greedy will bite me in the ass because, what do you call it? It's like it's too good to be true, whatever." It's like they're not greedy enough. But then you have the people that are like in DeFi. Oh, I'm gonna chase meme coins, and I'm gonna take those meme coin earnings. I'm gonna pull them out, but they're not actually going to pull them out. They're going to get a thrill for it. So they're going to go and chase more meme coins. It's like,
Mhm.
that's too greedy. So it's like, be greedy, but not too greedy, like a comfortable level of greed. Um, just like, with businesses, like, be greedy, charge high prices, but don't charge an unreasonable price to the point where every customer that comes on board is like, this is not worth the value that, you know what I mean?
Yeah.
Like, you have to find that comfortable level of greed. And a lot of people say DeFi, set up your DeFi business, whatever. DeFi is not a business, but some aspects are similar to running a business, I will say. I hate people that say, set up your DeFi business, because your DeFi business is an investment avenue. It's like setting up a real estate investment. Like, and it's not actually a business until you have like clients coming in and giving you capital to manage and stuff like that. Or another instance would be like an actual DeFi business could be an example of like metrics finance or something like that. That's a DeFi business. Like,
It's
we
it's
have a
it's
product within DeFi and we sell it,
yeah.
so it's like just another thing. Treat some aspects like a business, but don't entirely treat it like a business, because guess what? Businesses typically have a little bit more consistent income than DeFi does, like, and a little bit more consistency. It's an investment avenue, we'll call it, and an asset class. So
there's a substantial amount of risk with, a business as well.
yeah,
Because, you have employees in a lot of cases. There's a lot more, licensing and, depending on your business, regulations and equipment. And
yeah,
there's so many plates that you have to spin. So,
yeah. And
I'm guilty of it. I've called, my DeFi, my business before, just
me
because,
too, yeah.
but I joke about it because I don't have employees. I don't have, a lot of those, that overhead that
People
an
don't even
actual
call, like,
business has.
yeah, yeah. People don't even call, businesses with one employee businesses. They call them, whatever you call it, solopreneur or something, not an entrepreneur. That's what they call them. They call them, I forget the exact term for stuff. Um, but yeah, I mean, it's like you have to, all of this stuff. I'm not saying just to like yap about it and say like, don't call it this. Like, it actually
Oh, I
has.
just I joke about it because,
No,
my
yeah,
my
yeah, yeah,
ex, she owns a couple of restaurants. And, she was, was always, talk to me about, "Oh, man, I got, this employee and they weren't able to show up, and so I had to go in and I had to work for them." And, and it's a real struggle as a, especially a small business owner, that, there's always something breaking. There's always like an oven breaking, or, a power issue, or the AC unit's going out, or the walk-in freezer, went out. And, you're always, putting out fires,
yeah,
where,
yeah, yeah.
as in DeFi, it's just like, oh, okay, I put some liquidity in there, and, I keep an eye on it, make sure that it keeps earning. And if it doesn't, I take it out, move it somewhere else.
Exactly. Yeah, and this shit matters though, like what you call it, and the reason why is because it's all mindset. It's all part of how you treat your portfolio. Like, if somebody were to come to me, right, me being an entrepreneur, and say, okay, like, there's this opportunity, it's called DeFi. You're going to set up your DeFi business. Well, what's the first thing I'm going to do? I'm going to go register an LLC. I'm going to go and start trying to do research, put my business plan, all this BS. But really, what I ought to be doing is just sticking some damn money into the thing, right? And
Oh,
not
yeah, yeah.
trying
No,
to do
no.
all this
Yeah,
stuff.
you
So it's like,
definitely need. Other than the tax, the tax aspect of it, I could see setting up an LLC or an S
Yeah,
corp
well,
or something
set
like
up an
that.
LLC, yeah, but, like, that's after you've made a little bit of money. Like, you don't wanna
Oh,
do it.
absolutely.
Yeah,
No, you it
you don't
needs
wanna treat it like a
it's
business
the cost
before you even
benefit.
determine if you wanna invest into it, you know? So, yeah.
Well, it's I mean, it's the cost benefit. Basically, it's like, okay, the amount of hoops I have to jump through, the money I have to spend, if you have to do quarterly taxes, if hire an accountant, whatever it is, if it exceeds, the money that you're making in DeFi, it makes no sense to do it. It's like, yeah, I definitely get where you're coming from with that.
Yeah, exactly. So it's like, all this stuff is like mindset. And again, like I try to speak humbly. You don't have to listen to me. It doesn't matter to me if you listen to me or not. I don't care if you listen to me.
I
This is
listen to you
just
all the
based
time because, I mean, you're a smart dude,
I
you
appreciate it,
know?
but this is just based on my findings over the past 4 or 5 years that I've been investing in this industry. This is based on how I've seen it evolve. This is based on my experience working with clients and running businesses in DeFi and having that data. So it's like, again, if you want to pave your own way, that is completely fine. And I recommend it. Be ready to lose some money, like, but make sure you like do it with a small chunk of money so you don't lose a lot of money, because the only way you learn is through your losses. Like people like to say, the worst thing that can
Pain is the
happen the
greatest
first time.
teacher.
What's that?
I said, pain is the greatest teacher.
Yeah. Well, the worst thing that can happen, Mike, when you go to the casino is you win your first time. That's one of the sayings. And the reason why is because when you win the first time, all of a sudden you're gonna want to keep going. You're gonna want to keep throwing money at it. Like, and sometimes that may work out for you, sometimes it won't. Um, but yeah, and on a side note, like while we're on the topic of casinos, it's going to get pretty scary with casinos and AI, because soon they'll have facial rec that can scan your face, throw you in a database, and say this person has never been to this machine before. So then they'll be able to say, okay, let's give them a win, and they give you a win, and then you want to keep going. And then they can reverse engineer exactly how much money they can make or lose from you. They could see if you're smoking a cigarette. They could see if you're drinking, how much drinks you've had. Like, AI is going to get scary with casinos. So definitely be careful with your gambling if you are gambling.
Yeah.
Have some discipline there. But yeah,
And that's a good way to end this episode. So my final thoughts is when it comes to an investing mindset, you before you get too deep into investing, if it's traditional finance, if it's real estate, if it's crypto, if it's DeFi, trading, whatever it is, you first need to work on yourself and your mindset. You needed to develop discipline over your emotions, discipline over if you have a loss, if you're trading and you end up, getting liquidated, are keeping yourself from revenge trading and,
hmm
going in again harder, and doubling down, trying to win that money back. I'm sure you've seen in movies, people, that are gambling in casinos and they lose. And so they put more down and they put more down and they put more down. You know, you need to be able to have a mastery over yourself and your mind before you are ever going to be successful in investing. So
yep.
that's my final thoughts. What are your final thoughts, Jake?
No, I completely agree. Like, just make sure you're treating this as an investment avenue and as a strategy. Make sure you're sticking to that strategy and make sure you believe in the underlying assets. Because when you believe in the underlying assets, it's like that you're writing money off in a sense, but at the same time, you have conviction that assets are going to do well in the long term. Like I invested into one of my friends, like what do you call it? Startups a while ago. Not nothing too much, like 10 grand or something like that. But it's like when I invest 10 grand and I evaluate his company, I didn't evaluate based on emotions. Like, okay, this is my friend, I should give him money. I didn't evaluate based on that. I evaluated like, okay, this is a startup. I know that they don't have any customers yet. They barely have a working product. I know that this is a pain point. I did research to see if it was actually a pain point. I did my own analysis as opposed to looking at their projections as to where they can go. I thought about the best industries that could apply to. So it's like I thought about everything myself as opposed to just listening to somebody else. And
Yeah.
then what I did is I gave him 10 grand and I wrote that off. I said, okay, 10 grand. I'm not going to pester him about my investment. If it works out, it works out. If it doesn't, it doesn't. And that's
Hmm.
exactly how it should be when you're investing into crypto. You put money in. If it works out, it works out. If it doesn't, it doesn't. Expect it to go to
Mhm.
zero because it very much can in certain protocols if those protocols get exploited, or in certain assets, even if those assets go to nothing eventually. It might not work out. So it's like diversify as well.
Absolutely. Well, I appreciate you, coming on. I very much enjoy having subject matter experts on the show. People that are successful in their own sectors. With you, obviously it's crypto and the software that you've developed. Taylor that's there in Dallas. Um, he very successful lawyer. We have multiple people that come on the show that are licensed financial advisors. I love having people like you all on because you speak from a place of authority.
Mhm.
You've mastered your art, whereas people like me, it's like, yeah, no, I do great. I'm sitting in my cabin enjoying life, and I make a little bit of money here and there, but I have a good channel and a good community, but it's a different level, that you guys are on where you're risking it all to, get, to reach that brass ring, to get to the next level. It's I'm not risking a whole lot. I'm risking a little bit of capital and a lot of time. That's basically it. And it's time that I have. I'm
Yeah.
retired. So um again, roundabout way to say thank you for coming on and sharing your knowledge and your experience with the community to maybe inspire them to to go out there and start a business, start a real business. People need to start thinking about what they're going to do with if they end up making money in crypto. A lot
Yeah.
of people don't do that. They don't have the discipline. They're just like, I'm going to invest in crypto. I'm going to get rich. Okay,
Yeah.
and then what? What after that? You're just gonna buy a Lambo and a big house and spend it all and then be broke again?
Yeah.
Or are you gonna start a business? Are you gonna diversify? Are you gonna buy some rental properties, some Airbnbs? What are you gonna do with that money?
Mhm.
Before you invest, you should have all of this mapped out.
Yeah. And I
So,
want to first off, like regarding that as well, start by saying, what do you call it? That like the plan for me has always been to diversify out of crypto. Now, with that being said, that's not to say that I don't believe in the long-term vision of crypto. I think the DeFi ecosystem will replace the TradFi ecosystem. It's not happening
mhm,
tomorrow. It's not happening by 2030. It's not even happening by probably 2050. It's going to take a long time. And
mhm,
TradFi will still exist. It's just going to flip, right? There's going to be a switch where there's now more money eventually in DeFi than there is
mhm,
in TradFi. But again, TradFi is so astronomically large, like it is not happening anytime soon. Maybe by 2050, I don't know. But it's like in the meantime, I'm diversifying out of the industry and still having a relatively large allocation. But while the market shits the bed coming soon eventually and into an entire bear market, like I'm not going to be in that. Like, I'll
yeah,
come back, but I'm not going to be in it while we're riding it down. So like, don't have too
no.
much to the point where you just hold all the way up, all the way down. At least play the markets. So yeah, or don't. I mean, doesn't matter to me, but so
Well, again, appreciate y'all and appreciate everyone in the chat. And until next time, Veteran Crypto out.
later.